Hey, it's Mack with PriceActionTradingSystem.com. It's Monday, it's November 28th. This will be our chart lesson for the day. And just another range day, basically. It was pretty tight for a while here, but we ended up breaking out in a nice move down. Then we did move back up one more time before we sold off yet again. So, pretty good day. Um, Not a whole lot of trades, but there were enough of them here that were relatively easy to spot following the rules. So I'm going to back out and go through these, and I hope everybody had a good holiday break. It was nice to get a break for a few days, an extended weekend. I used it to get away and get my mind off trading for a few days. I didn't answer many emails, so I'm trying to catch up. I didn't get a whole lot over the holidays. I appreciate y'all holding off on them, if that was the case. So I'm pretty much will be caught back up by the end of the afternoon today. So I appreciate you holding off on those because it does help me out not to have a 3 or 4 days of work there when I come back. So, but let's talk about the trades. You can see the range here. Um, we we Here's your overnight highs and your overnight lows. We got outside that overnight high once, and we never got outside the overhigh low. We pretty much just went sideways for the day. And we opened, you can see we opened right here. Actually, we opened up a little bit. So we're going to have closed down considerably from where we actually opened, but from where we closed on Friday, which was back over here, or was it? Actually, I would say where we closed on Wednesday because there wasn't much going on Thursday or Friday. So um, that's going to be here. We closed at 2201, let's say, and today we closed 2201. So we really are unchanged from last week. We're really right back, even though we had a little bit of a rally here. We ended up closing right back where we started. So let's talk about the trades. When I came in, we had a little trend working up inside the overnight highs and lows. Unless this gets outside during the regular hours and stays out, we're probably going to have a range day. Or we're either going to trade down, one of the two. But I was leaning more towards a range day, especially when it just starts going sideways. And you can see how flat that EMA is. But we had the close outside, a couple of legs up to a new high. Um, you um, so the reason I like this trade here is this is a new low, and then this first entry short, pullback second entry short. I was a little hesitant of it. It's a relatively bullish signal bar. It's not a perfect signal bar, and we were losing some momentum. Here we didn't get back to the upper side before it turned down again. So that had me a little bit concerned that you're probably better to wait on a second entry. And then when your second entry comes, here's your signal bar originally. And then so let's wait on the next one and see what we get on it. Well, it's not a very good signal bar either. Still got a lot of stem, even though it looks a whole lot better than that one. So I'm really hesitant to enter there. I think you're better to wait and see what happens. And when it tests lower again and makes a new low, then that's a double test of this high. It's a double test of the EMA. We're probably going to push up for a new high, and that's exactly what we do here. Again, this one is a failed second entry short, so it's really close to being blue. And you probably could argue for that one to be blue, but I was just a little bit afraid of it with it being that close to the highs and not getting back to the upper side of the channel. So that's the reason I marked it green. You could probably argue, I mean, it's right there on the borderline. You could probably argue for that one to be blue, but I think you were better off to wait on this trade. And if you'd have taken this one, you'd have had to ride all this out because I don't believe you would have been out yet. So by waiting on this one, you get an easy trade. And you don't have to go through all that stress right there. And then again, there's a double test here of this high, but they're right there together. You could probably argue for that one to be green, simply because it is a double test of that high from back over here. It's not very spread out though, so I'm not crazy about it. You're better off to wait and then you get a failed second entry long. Notice that's a new high, first entry, pull back second entry. It's a double test here. It's not a great signal bar, but if it breaks below this one, we're probably going lower, so that's why I liked it. Um, quick, easy scalp, and you don't get anything else out of it. And then, of course, you got a little trend line working down here, and we bounce once, twice. You really could even make this one green. It's fairly bullish bar, but we don't have a break of that trend line yet. And so I was a little bit hesitant right there because I figured we might push down one more time, which we did. But you still would have been all right entering there. But again, I think you're better off to wait here. Just go long right there. And this turns out to be a pretty good trade. There is a failed second entry short here. Because this is a double bottom, so that's a new low. So first entry short, second entry. So you might have considered going long there, but you don't have much room to get out. And that's the problem with that one. If you sat on that one, if you wanted to enter there, you had to wait on it to come back, let it break higher and come back, and make sure you got in enough to get out before here, because you see what would have happened. You would have got stopped out. So that's the only way you could enter that one. And then the same thing right here coming down. It is another test of this high. And you do have a break in a new high, but it's just not a very good. Usually you're better off to wait on the lower high. So maybe you take that one, maybe you don't. Again, it's real close, but I'm going to leave it green. I'm just not crazy about it. And then we pull back down, we test this again. This is really just a repeat pattern of here. So I like this one to go long. And really you could consider this a failed second entry short too. There's a low, first entry, second entry. That was the first break above. So you could, but by this time, this is obvious. This is a range, and I like that one. And then we run up, and we get a break outside, big bearish bar. We're probably coming back to test the EMA at a minimum. But generally, these failures are you're better off fading them and taking the short here. And that turned out to be the trade of the day. If you took that trade, and you really don't get another chance to enter. Actually, there's a breakout pullback short here. So you might consider that one. I'm going to make it green. It does. Now let me mark this first. It does break higher and turn, but it didn't get out the other side, so that scared me a little bit. And then we just kind of went sideways. There's a failed second entry long here too, but you're really just going sideways. So I think you're better off to wait and just see what happens. And we ended up bouncing across here, and then you get a double test of this low here and a nice bullish bar. So go long right there, and it just runs right back up to the other. Notice that it gives you a double test of this area, but that's too neutral of a bar, so I don't think you want to go short there. There's a lower high here, but again, a very bullish bar. You never get a break below this one, but it's too close to the low anyway. But when it reverses here, you get a higher low, and look how many times it tested that low right there. So I like that one for second entry long. Plus, we never made a new high here after this break. It's just really two legs down and then a move up. And again, if you caught this one, you can ride this one all the way up. And notice that there's this is a new swing low, so you come up first entry short, pull back second entry short. Actually, first entry short, second entry short, it fails, and just put your stop there. And you're hoping just to ride it to here, maybe back to here, and you get a nice run up. I don't think I'd take this short here though. I'd wait on the failed second entry short coming off this one, and your reversal pattern, and that comes here, but you never get a break below that bar. So it did go higher first and then go out the lower side, but if you took it that way, you would have got stopped out. So I think you're better off just to skip that one, being that close to that support resistance area, because look how many times we tested it there and it held. So try to go higher once, twice, and that's really a double test of that, and a nice bearish bar. Just go short there. And again, you don't know it's going to do that, but you could have ridden this all the way down. So another pretty nice trade. And if I'm going to try to get a runner, the few times on a day like this I'm going to shoot for a runner is on these failed breakouts like this right here. I, I'd like to hang on for a runner for that one. But you see, most of these just go back and forth in here. Now this one of these would have probably had a runner, but you're better off to try to catch a failed break where you catch that clearly low spot. And that's the closest we came here, but that I don't trust that one. So I think you're better off. This was the only one you really got that you had a nice runner opportunity. If you'd have kept a runner here, that would have been a good one too. But like I said, I generally only try to keep a runner on those failed breaks so you catch an important high or low of the day, and you got a chance to catch a really important high right there. So one runner here would have given you probably 7 points, 6 or 7 points, depending on how much of it you got. If you got all of it, you get 8 points, but you're rarely going to get all of them moved. So and you don't want to try to get it all, because by being greedy like that, you're going to cost yourself more times than you're going to help yourself. So yeah, just a range day. This is not a midline. The range was just tighter here. And you can see that point came back into play. It acts as support and resistance again later in the day. So, but that's not a midline. This was just a tighter range for a while than what we had the overall. And this was really what I'd call the lows of the day. You had more touches right across here. So, yeah, not a great day, but not a bad day either, especially for a range day. We had some pretty nice moves here, and they were fairly straightforward. A lot of them were green that you know could be real close that are iffy. So it could have been more trades than it really looks like on there. Generally, I'd say you only want to take the red or blue trades. The green ones are if you're really being aggressive. And when you're trading aggressive like that, you really got to take them all, because some of them are going to fail. And so you need those better trades to help your average really. So keep that in mind. But I think most traders are going to be better off sticking to the blue or red trades. But I talk about the others because if I don't, somebody's going to send me emails on them. So I think we have to talk, because not everybody's at the same level. Some people have been doing this for a long time, and they want to see my thoughts on these on the aggressive trades as well as they do the straightforward trades. So yeah, that's pretty much it for the day. I did want to address one other thing. Somebody sent me a link to somebody had made a comment. I've made a comment more than once that that I didn't believe that there were really such patterns as wedges. And my thoughts on wedges are that they're created by two. Wedges are really created by two channels or two trends that converge with each other. So they're not necessarily a wedge pattern. And if you understand the big picture, you're going to understand what the wedge is most likely going to do versus most everything I've ever read teaches you that, on a wedge, you trade the breakout. And today's probably not a good day to find an example of one, but you might have had one here. You might could say that it never really got, but you're working down here and you're working up here, but this one working down never really gets confirmed. Looks probably like it's valid. You get a big overshoot though, and then you got one working up. And you do have a break here. You never get a new low, but you get a big overshoot here, and then you're working up, and you get a break and new high. So, if you're looking for wedges, you can find wedges all over these charts. But my point is, when I say I don't believe in wedges, is I believe my point is they're caused by converging trend lines. In other words, you got a trend line working up and you got a trend line working down, and that's what causes it to look like a wedge. So, but if you understand the bigger picture of the day, you'll have a much better understanding of where prices are going to go versus trying to trade a wedge. And definitely don't trade the old standard of trade the breakout, trade with the breakout of a wedge. And if you look hard, you can find wedges all over these charts. They're here. Now that I'm looking for one, I'll probably never find one, but I don't look for wedges, so my eye isn't really trained to see them. But you could probably say there's something working down here and something working up right here. And, if you're looking for wedges, you're going to see a wedge there. And guess what? If you trade with the breakout here, you'd have had a loser because it broke out to the upside and then it went lower. So that's my issue with wedges. But if you're looking at this as a downtrend, really at this point you'd be looking at this as going sideways. And you would ignore the wedge. And if you're looking at this as going sideways, now you got a better feel for what's probably going to happen. Prices break lower. We traded down here, so we'll probably trade on down. But the real key is prices broke out, came back and did a retest, and then headed lower. And you would have had a trend working right down through there like so. So you would have been at least looking for a retest of the low here, and that would have given you a reason to catch that low on down, and then it reversed. Exactly what you would expect to happen. So that's my thoughts on wedges. I don't believe that a wedge is a valid pattern that you want to look for. That's my thought process. If you think that wedges are something special and you want to trade them, by all means try to trade them. But I can tell you that in my opinion, wedges are caused by two competing trends converging, and one of them is going to be the major pattern. And if you follow the price action the way I teach it here, you're going to have a much better idea where prices are going versus this wedge right here, trying to figure out what prices are going to do when they break out of that. Or if you drew it right here, whichever. So when prices break out of that wedge, where are they going? And you see they broke out to the upper side but ended up trading lower. And sometimes they'll break out the low side and then trade higher. Sometimes they'll go with the way they break out. You just never know. But if you know the competing right here, you would have probably got maybe got a scalp out of one of these simply because it's bouncing off these lows and highs, and you get a failed breakout here, you get a touch off the top here. And if you caught this one, you might have ridden this one all the way down. So that's my thought on wedges. I believe that they're caused by two competing channels that cross each other, and they're not really a wedge pattern. So anyway, that's enough on that. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.